What up traders, what up investors, Ken here from Dyslexic Investor, and we just recently did a video about gold. Now we're going to be looking at silver. Yes, silver basically looking at ticker symbol SLV. Of course, this has been going up quite as well. Again, not as trading as a high price target as gold, but it's still on the percentage moves have been pretty drastic here. So just do a quick recap here. Basically here looking at a daily chart via our Thinkorswim client here. Again, ticker symbol SLV. Really just kind of been trading sideways here around the 200 EMA. Again, due to the overall pandemic, kind of came down, kind of start trading sideways. But once gold and silver sort of start sniffing out that money was being printed, potentially inflation ensuing with very low interest rates, we saw a lot of this really start spiking up here, and speculating starting to come out of like, hey, maybe I should start hedging something because the dollar's dropping and the overall market is interest rates are still zero. So that being said, people are just really getting cheap money at literally no cost. So of course you can print, but something that needs something more tangible, something lack of better words, concrete, would be like a silver and gold hedge. So looking at this chart particular, where you have multiple different other lines on here, we'll kind of break down the Fibonacci retracements here in a second and look at potential price targets, some headwinds, potential overhead resistance, and downward support to the downside. All right, so we had that huge move higher, basically jumping from $18 to currently $26, so nearly a $10 move in just about 2 weeks, so that is pretty substantial. Basically, that is a move of about 46%. So that's a nice return there. Of course, we've had multiple gap ups throughout that time, slightly pull back here, but it's really kind of playing the fundamental strategy, or the FOMO strategy, following the 5 and 8 exponential moving average here on the daily side, and just continue to grind up here. You see the purple parabolic SAR dots have been kind of creating that trend and really just propelling that price even higher. So that being said, what could we be looking out for? What are we going to be looking at if you're looking at it from a technical charting standpoint? So with this one, especially with the large trade that we'll be talking about in a second, we can kind of pan over here. This is a lot of options contract going way out until the 15th of January 2021. Someone buying the 25 calls, potentially doing a debit spread here, call debit spread here, basically purchasing and kind of minimizing the risk. Simulating on how that could look like, we can kind of look at that here via the Tastyworks platform that we use for trading options here. So basically 100,000 contracts at the 121. So someone's buying these various calls here and looking for the selling the 125s here. This could be inverse on different directions. So again, this really doesn't entail, we can kind of go look out and see the enormous amount of options activity going on here, because you can see silver has been moving quite a bit here, and basically this has been a very heavily bought and shorted market to some extent to the downside. But you can see here the amount of volume that came in at that $21 strike price here for that expiration of the 15th of January 2021 has been pretty astronomical. The open interest has risen quite a bit. We'll know more tomorrow if the open interest increases by basically 155 or whatever the day closes out with. But we're seeing, again, a lot of volume at the higher levels too. So again, the higher volume is basically indicating a higher delta. So these are just really folks hedging, potentially playing the markets in that fashion. Of course, we're seeing, of course, a lot of activity also at the $25 strike price. Again, with a lot of open contracts there as well. We have a lot of open interest as well, kind of coming in, even the calls out of the money. Again, speculating that these could rise up in the near future. Again, this is options contract is 162 days away, so you could easily speculate, because there's a lot of volume coming in here, basically around the $30 strike price, and we can kind of look at that here in the second once we kind of dive into the chart. So look at that overall options contract. We're basically looking at if they are hedging out in this certain direction, you're basically hedging $21 million to potentially make a little bit, about 19 million if that completely works out. But again, I think this is more of a hedge position, most likely for a large fund or a particular large trading firm, basically hedging out their bets, buying these credit spreads in here. If they bought these straight out of just basically going full money wise and just buying these calls straight out, we're looking at 100 million plus $100 million options here. Again, that's nothing's unlikely, but a lot of these instruments have been traded for hedging and different various components, but we're just really seeing a lot of options activity around these strike prices. So be mindful. We'll see on how they update the following couple days. If the open interest ensues, we'll see that there's going to be a lot of open contracts going forth there. So make a very much of a mental note there. So looking back to the chart here, we can kind of start diving into doing some Fibonacci retracements. I kind of want to do a further zoom out and actually look at a monthly chart here from the previous high. So we're like the previous high, basically, again, that happened towards the beginning of 2011. So we're going to do a fib basically from all the way from the previous high to the previous low here, and we start seeing some really interesting points here. We're starting to see that the 29.61 price target has been coming up here. Once we kind of go back into a daily side, we can do on the daily chart from a previous swing high to that same low. We're seeing some interesting kind of components come out from this as well. Basically, the 2618 is lining up as well with that $29 to $30 price target. So this is kind of a phenomenon of within Fibonacci retracements and technical analysis of like, hey, there's a lot of different various components up there that's kind of creating this attraction or a magnet for these options to potentially trade to that level, really looking for this potentially the overhead resistance or the magnet, you can call it, potentially pulling it or keeping it away is around $29.40. Basically, I would just round it up to $30 is a particular target if this really continues to move. Is it going to hit there? I can't tell you when. It could be in a very short period of time due to the amount of momentum we're seeing in this. We are still seeing a lot of volume pick up in this stock or this ETF, and really see this really come to fruition. To the downside, we're really going to be looking at, if you're depending on what time frame you're trading, if you're just scalping it or short-term trading it, swing trading it, unless you're not doing really just a full-fledged hedge or a bet to the upside or the downside. The first level is really going to come in around 23.82. Again, that's where those parabolic SAR dots are on the daily side. And then further to the downside, we're just going to basically call it in around the 21 EMA, which is exactly at $21.42. And then support basically at 19.88 as well. So between those would be some potential downside support if it decides to start coming down. This again has run up quite substantially. Going back to the monthly side, we can kind of see here that on the RSI on the monthly side, we haven't really tapped the overbought. Again, RSI indicating if it's above 80, it's overbought, indicating there's a lot of new money in this. There's a lot of potential folks who've just jumped the gun, not meaning that's always going to be the most positive notion of what could happen in the stock, but it's just one particular indicator. We've seen this before on this run up in the basically at the end of 2010. We saw a huge run up. We hit that movement here and the RSI. Same with the Chaikin money flow. A lot of larger investors, larger funds, and institutional funds were buying into this. That's what the Chaikin money flow kind of gives you a potential look at of what the overall broader institutional investor could be doing, because it's harder for them to be diving in and out of things. They have to be very methodical on buying at certain levels and just continue buying for days. As you can see with like Warren Buffett basically been buying Bank of America for the last 2 weeks, thus nonstop every day. That being said, momentum is pretty strong in here as well. We're seeing there's no squeeze indicating here, but let's just kind of dive this down to even like a weekly chart. So this is a weekly chart. So each of these tickers are each candle is a week, and it goes back 3 years. we're seeing here it's hitting the RSI here on the overbought. The same with the Jacob money flow and everything. It looks super strong here. On the daily side, we've hit the RSI multiple times, but guess what? We're just that RSI just really just combats with another gap up, and just continue to climb here, making an all-time high today at 26.47. This one's going to be very hard to speculate on where it could go. If you're going to be more on the bullish side, you're really going to be looking to around that $30 price target, potentially even higher if it can get that momentum going. And then to the downside, you're looking for around potentially 22, 32 to the short to the more like the intermediate term, because if this really starts losing momentum here via the TTM squeeze, and the volume zone oscillator doesn't really continue to come in with a lot of volume, we could see kind of a stall or kind of trade sideways, and maybe potentially kind of have these moving averages to kind of catch up, and then maybe get another kick higher or lower. So just be mindful of that. Be very careful with this. Again, this is large moves within silver and gold. Looking again to kind of give you the full takeaways here on the monthly chart. Again, we're looking for initial price targets. If this trend can continue, basically looking for $30. If it breaks the $30 and it kind of potentially consolidates or even wants to go higher, again, this is a monthly chart, so each of these candles are a month, so this could take some time to play out. So a lot of those trades that we talked about are going out all the way into 2021, so those trades are really just giving it some time, those call options, to work on their behalf, potentially trying to get to that $30 level and then potentially even to the $40 level. Again, those are going to be some pretty key indications of where we could be looking at. And the key indication too, so we can do the fibs again for the monthly side, that again, that 78.6 percentile move is also coming in around the $40 limit. So basically, if you're looking on a monthly chart, you're really looking for it to break 30, then 34, and then $40 to the downside. You're really looking for some support, basically coming in around $19 to the short side if you're looking via the monthly chart. Again, guys, hopefully this was educational and you learned something. Please definitely check out the Discord. We also have the YouTube Join Club button down below where you can join the Dyslexic Investor Club for some perks there. Definitely check that out as well. Again, guys, thank you so much for watching. This is Ken from the Dyslexic Investor, and I'll catch you guys.